Welcome to Triangle Tweener Talks, a weekly podcast by builders for builders where we explore the startup journey from the idea to the exit and all the lessons in between with an exclusive focus on founders from the Triangle region of North Carolina. Now here's your host, serial founder and general partner of the Triangle Tweener Fund, Scott Wingo.
First, a huge thank you to our gold sponsors. Today we are featuring Robinson Bradshaw. With national reach and deep Triangle ties, Robinson Bradshaw delivers high-touch, sophisticated legal counsel to emerging growth companies and venture investors. We'd also like to recognize our silver sponsors. Today's Tweener Talk features Automated Consulting Group. From AI strategy to ROI in 90 days, Automated Consulting Group brings executive-level AI expertise to businesses without enterprise budgets. Thank you again to all of our sponsors for supporting Triangle Tweener Talks and the entire Triangle startup community. It takes an ecosystem to build a thriving community, and sponsors like these are very valuable, and they contribute their time and also help sponsor things like the Triangle Tweener Talks and Triangle Tweener Times. Thank you.
Get ready for a special crossover episode.
Welcome, listeners, to the Ecosysteming Podcast. I am your host, Thom Ruhe of NC IDEA, and today we have an episode for you. It's much more than an episode. It's actually a big announcement that some may have already heard about, namely a joint venture that we have just entered into with the good folks of the formerly identified Triangle Tweener Fund, now known better as the North Carolina Tweener Fund, powered by NC IDEA. So, of course, I am speaking of Scott Wingo and Robbie Allen. Gentlemen, thank you for joining the podcast. Judging by the early reaction we've had to the grand announcement, I think there'll be more than a normal amount of people tuning in for this episode.
Yeah, thanks for having us, Tom. I like to say this was a little over 20 years in the making.
Yeah.
So, we're very excited to partner with NC IDEA. This is going to bring us statewide, which we've been thinking about doing for quite a while. And we have seen as much excitement as you have. My LinkedIn was blowing up that day and I had to turn notifications off. And so it has been great. And we really appreciate, especially all the entrepreneurs outside the Triangle are kind of giddy. I've had 3 calls today, and the folks in Wilmington are particularly spun up, as you know, Mr. Jim is gets them going. But we've heard from the other side of the state and folks in Charlotte, so it's been really great. There's been very, very enthusiastic response.
Yeah, and that's what we were hoping for, of course, because at the end of the day, that's who we serve, right? It's these founders that are reacting so positively. We've seen it too, and when you consider the just fortuitous overlap, right? I think we checked. I could check with my producer, but I think it's around 36 Tweener-funded companies were previously funded by NC IDEA, right? And if we wanted to start somewhere, it would be like what that ecosystem play looks like. Because I tell you, as you might imagine, with the companies we fund, we establish a pretty intimate bond, right? Like we use language like, hey, you're part of our family now. And their grant periods are typically 6 to 12 months. And I know Robbie can even attest to this, seeing as that he is a past seed grantee. And we'll get to his story here in a second. But, through that year of the grant period and, we're helping them achieve their milestones and hit those wickets. They get to that point where they're ready to go and kind of go on to the next stage. And it's like, it's like taking your kids and dropping them off at college. And you realize at that moment, that kind of locus of where you have influence, you just transitioned and you only hope that you've done well, right? That they're going to go ahead and be fine. And we've had so many of them, and it's frankly, it's humbling, who have said to us, especially over the last probably 5 years, as we start our raising journey, it would be so wonderful if y'all were on the cap table, right? Like we really would love it if you guys could participate in our upside. And we've just never had a way to do that. We've never had a vehicle to do that.
Yeah,
until
this
now.
is where you have to read your little piece of paper.
Yeah, let me do that. Thank you for that reminder. Mr. Wingo, making sure I don't run afoul of regulators. we are talking, of course, about this new arrangement in the Tweener Fund. So I am duty bound to make the following disclosure. Please turn up the volume. NC IDEA is a lead investor in the NC Tweener Fund, the fund, and has a material economic interest in the fund, including participation in the fund's carried interest. Consequently, NC IDEA will benefit indirectly from any investments that are made in the fund. Thank you very much for your patience on that. And all kidding aside, what that really says is it's a reminder to, other organizations, institutions. Frankly, we're hoping big foundations and big orgs with significant resources join us in this activity, because it really is a strengthening of the economy play. And whatever carried interest that comes back to NC IDEA, that's not so I get a nice big bonus and can buy a new car. It's so that we can make more non-dilutive funding. That's the whole point of this model, right? So that we have this virtuous cycle that will continue to feed itself, but strengthen the economy of North Carolina, which is ultimately our charitable purpose. So that is a big part of the why. Hopefully we can take some time now to talk about the who and the how, because that's where you two gentlemen of distinguished backgrounds and distinguished entrepreneurial accomplishment come in. So, Robbie, you're so talkative. Why don't we start with you and give us a little bit of background. I alluded to that virtuous cycle, especially here and now as it relates to you specifically. Why don't you share with the listeners a little bit about yourself?
Yeah, and so Scott likes to refer to that as the flywheel, and it's interesting. I've had when we did our big announcement in Wilmington, I actually went in and I knew we were going to talk, and I talked to my AI assistant to see if there was any interesting jokes related to the announcement that maybe I could relate to the audience. And one of them that it came up with completely on its own, I didn't even tell Scott about this, was something to the effect that the main reason we did this partnership was just to give Scott another reason to say the word flywheel in public. I was like, we've definitely jumped the shark. We've hit AGI because it came up with that all on its own.
It must be in this train. I must say it so much it's in its training memory.
So what I'm hearing is, Robbie, you and I will start a little side bet on all future gatherings with the three of us, an over-under on how many times he says it in the course of a
Let's make it a drinking game. Every time I say flywheel, you'll have to take a shot.
Fine by me.
Anyway, so I started my first company. It was originally in 2007, and I got an NC IDEA grant in 2009, and that funded my second year of operations, like pretty much the whole year of expenses, while I was still working a day job at Cisco. And this was right before I then left Cisco to then go raise $1 million seed round in 2010. And so I always thought, like, to me, especially early on with NC IDEA, I would tell entrepreneurs, like, you're crazy not to apply. Like, it's non-dilutive. It's free money. Like, how often does that happen in the startup world? And so I often would say, and especially before you came aboard, Thom, I would say, like, NC IDEA is the least talked about best thing in the startup ecosystem for North Carolina. Like, why would you go start in North Carolina versus somewhere else? And to me, it was NC IDEA. So, we have, I have that experience going way back. But, I started a number of companies, mostly AI-oriented companies. That's my background. And then in 2022, after Scott had started the Tweener Fund, I joined him after the first quarter, just to provide some help, because when he started and he had this idea, I was instantly, sold on the concept, in part because I had done a bunch of angel investing, especially after the sale of my first company, because I wanted to, give back and work with other entrepreneurs. And, you think, well, angel investing, that's the way you make a lot of money, right? Turns out it turned out to be a little more philanthropic than I anticipated. And so I kind of was soured on the whole notion of angel investing as a way to, kind of get a return on money. Again, it was good because I liked helping entrepreneurs.
Yeah,
but
but
then
you're not getting the tax write-off, right, for the losses per
exactly.
se.
If they go out of business, you might get that.
Right.
But anyway, when Scott started the Tweener Fund, and the whole idea is it's a lot of investments in companies that match certain criteria in the triangle. I thought that made a lot of sense, and so I was happy to help him out with that. And then over the last 4 years, it's only continued to grow, and now I couldn't be more excited. Again, it's 17 years since NC IDEA gave me that grant for my first company. And to now have this partnership, Scott and I are, as energized about the future of the North Carolina Tweener Fund as ever. And we have a bunch of interesting stuff planned, as we always do. And Thom, you'll learn this, like with our sponsors, I always tell them, like, we're going to do some new stuff. I can't tell you exactly what that's going to be because we don't know yet, but every year we're doing some new stuff, and that's not going to stop anytime soon. So this partnership's obviously one of those things that we weren't exactly planning on, and it's a big one. So we're super excited, and I can't wait to dig in and help us figure out how to grow. I'm a North Carolina native, by the way, from Burlington, North Carolina. So I can't wait to get our first Burlington company at some point. But I'm excited to go around the state and figure out how we can get as many of those companies into the fund as possible.
It's funny. We've been talking about the model, and that's been a big part of the announcement. The index fund, rolling fund. I was at a big event just last night, and they had a bunch of very important people from very important organizations. The opening keynote speaker was from a company you might recognize that rhymes with CP Morgan. I didn't even do that well enough. And I just listened to her talk about, you have to pick people that are knowledgeable and understand how to mitigate risk and understand the markets. And just every fund manager that followed built up this mythology, right? If you're thinking about investing, like, you have to pick the partner that has so much knowledge, and you'd really think it was like they were trying to describe it as decoding, DNA. And the first time, Scott, I think I heard you talk about the Tweener Fund. I was like, well, shit, that makes all the sense in the world, right? Like, that's pretty much how most of us manage our retirement portfolios and things like that, right? And it just so much common sense. But I was like, well, if that was the prevailing thought process, there'd be a lot of people that couldn't charge a lot of fees for so-called expertise.
Yep.
So that's my clever way to transition to you, Scott, to talk about, the thesis, the investment thesis, and the model, and, how you settled on that, and what are we seeing? I know it's still early, as an investment vehicle, but, like, have you had to tweak it yet around the margins? Anything you want to go into on that?
Yeah. And so my quick bio, I'm a serial entrepreneur like Robbie. I'm on company number 5, and I'm from South Carolina, a little town called Aiken, and then went to University of South Carolina undergrad computer engineering, and then came to Raleigh for a master's at NC State. Fell in love with the area, and took a job in Connecticut for 2 years, and just could not take the cold there, so moved back. But that was a startup, and I really loved startup life, and started my first of 5 companies in 1995, and have been doing this all along. And when I started my first company, I got in over my head pretty quickly, and I went to Tom Miller at NC State. He's kind of an OG in the entrepreneurial world, and he said, you should talk to Richard Holcomb. And he was an entrepreneur that was 3 years ahead of me, also a South Carolina and NC State grad, interestingly enough. And Richard gave very graciously his time to me, and I tried to pay him, and he said, don't pay me, pay it forward. Like, he was, at this point in time, he was 30 and I was 20. Now those, we're both older than that now. And I've really taken that to heart and tried to do it. And the way I got here is by doing a lot of mentoring. That's how I met Robbie. So I kind of became known as, if you need help in the triangle, I'm someone that'll do it, and I'm not you don't have to pay me. I'll just do it very, very, without having to be compensated. I don't. This is what I hate about Silicon Valley. It's like yeah, I'll take a meeting, but it's going to be a quarter point or half a point or something like that. It's
Very
a very
transactional.
transactional world. And I just think if we want our ecosystem flywheel shot to grow, then we can't be that way. That we have to kind of really kind of pour goodwill, entrepreneurial goodwill into the ecosystem, and it will kind of show up. So that got to the point where, as you know, there's been a mass influx of people to all of North Carolina. And through my business dealings, the company I'm most known for is Channel Advisor. So started that in 2001, went public in 2013. We tried to use that PR to like really hype up the area that, here was a Raleigh company going public. Obviously we've had Red Hat and big companies, but we were excited. And at Channel Advisor, we worked with eBay, Amazon, PayPal, old school Yahoo, all these West Coast companies, and then a lot of them have offices in New York. And increasingly, people I met were coming to the area, and they would say, "Where could I get a job there at a startup?" And I was like, "Well, certainly someone has a list of kind of up and coming startups in the Triangle." Also, selfishly, I found as I mentor founders, I can add a lot more value if you've gotten through product market fit. Before product market fit, and for those that may not know, product market fit is when you kind of have this. It's a little hard to define. It's like certain other things where you kind of know it when you see it, but it kind of like as an entrepreneur, you can start feeling the market pull you in. Like the customers are like excited and they want to do more with you. And they tell other customers, and then like you kind of like start to feel the energy kind of really pulling you forward. That's product market fit. There's books and books and books written on this, but that's the short definition. Once you're through that, then I can help you with a lot of things. But before then, you really need like an accelerator kind of thing. I've often said it really would be great if we had someone in the area that would really support accelerators. Tom, do you know anyone that would fit that bill?
One or two.
Okay, I'll tee you up for that. And because you really need like day-to-day hands-on help for that entrepreneur. It's like not something that you can just kind of, and it frustrates the entrepreneur because my advice is go build something, find a customer, sell it to them, get feedback, and just like talk to them every day until they love it. And then like, well, that's it. And I was like, that's it. There is no shortcut. You cannot, I can't give you a Candyland slide to get you from across the board on product market fit. Now, once you're through, I know where all the slides are hidden. I don't know how I landed on this metaphor. And,
I haven't heard this one. I like it.
This is the new Candyland one. I'm trying not to say the F word, flywheel, if you're wondering which one I'm talking about. Okay, so I was kind of like, well, I can kill two birds with one stone. I can create a list of companies that I can mentor that are through product market fit, and I can help people find jobs. And everyone will win, and I kind of foolishly thought, well, this way I can just send people there and I won't have to take so many phone calls and coffees. But that actually worked the opposite, which is that did not work as I thought. But that's okay. I love meeting entrepreneurs. They're my people. And anyway, so I started the Tweener List in 2015. And I chose Tweener because at the time I had a 12-year-old daughter. Now she's 18, so she's kind of coming out of her teenage years. But if you have kids, that tweener phase is what they call it, is kind of hilarious because I have two older kids at the time, and they were, she was like, she had seen one go to college at this point, and she's 12, and she's like, I'm pretty much ready for college, Dad. And then she would like, run into a wall or something hilarious, and you're like, well, I don't really think you are. So that's kind of like how these companies are when they first get through product market fit. The founder will be like, yeah, I'm through product market fit, everything's good, I think I'm going international. And I'll be like, whoa, buddy, time out. That's, you need to be more like $10 or $20 million before you do that. And so that's where the tweener came from. So I get that question a lot. And then, Robbie and I are here in the Triangle, and we kept seeing, because of the Tweener List, so then fast forward 10 years. So the Tweener List is 2015. This is the origin of the fund. Over time, people would say, could you add this to the Tweener List? And, there were excellent ideas. And it was things like, we want to see, this is an interesting list of companies. How much money do they raise next year? I was like, well, I'll look that up and figure it out. That's actually, knowable. To within, sometimes people announce funding and don't tell you the amount, but you have to file what is the form? You have to file an SEC form. Robbie knows it.
Form B.
Yeah, there you go. You have to fill the evil form B, and D. Yeah, so you can see. This is why I don't do it. This is why Robbie owns that, so it's pretty knowable, right? There's like a rule that you have to kind of follow that. Anyway, and then people were like, "Well, how many of them had exits? How many closed?" So I started tracking this, and then I was like, "This is a pretty good list of companies." I had the same angel investing thing Robbie did, and I was like, I want to invest in this versus like picking one or two. Like I want this like great basket of startups because it achieves two things. I support local companies, which is important to me, keeping our dollars here. And then number two, it de-risks the whole thing. Like I can now like spread it out and I don't have to like pick one a year or every 6 months that I kind of like put all my chips into. I've had many of those blow up, which is just pretty common in this world. And it helps diversify. Also, you tend to invest in things you like. So if Robbie was doing it independently, it'd be a bunch of AI companies, which is great, but maybe that's a super risky area. And for me, I invest. I like e-commerce, so I'm super not diversified across many dimensions, companies and then also industries. And the beautiful thing about North Carolina is we have such a diverse set of industries. We've got biotech, ag tech, health tech. We've got robot companies. We've got e-commerce companies. We've got MarTech, sales tech, dev tech, aviation tech, there's a whole class of deep tech, space tech, manufacturing tech, filter tech.
I think that's one of the biggest, strongest assets of the state that goes very much underappreciated and understated.
Yeah. And if in a perfect world, wouldn't it be nice to have a little piece of all those things, right? So that if ag tech ends up being, the next big thing, you've got a little piece of that action. So I started thinking about how could we do that? And a lot of the crowdfund people had some ideas, and it's kind of like, I like crowdfunding generally, but it's kind of like, I don't need like some, I want it to be like an accredited investor type thing so that everyone knows what they're getting into with this. Because it is, and this is a very important message, we have seen a huge influx of people interested in investing since the announcement. So thanks for that. So we started the fund in 2022. I'll cut that off. And, so 7 years after the Tweener List. And it's basically like the Tweener List is kind of like the S&P 500 in this analogy. And the Tweener Fund is an index fund for that. So that's kind of how it works. So it basically kind of, we identify the companies that previously in the Triangle, now all in North Carolina, that are over $1 million in run rate or 10 people. That's the best signal we can get that they're through product market fit, up to about 50 million. The top range doesn't really matter too much, but it's really the entry point that tends to matter. And then that's what we primarily focus on. Now, the one little asterisk there is AI has changed the game. We're seeing more and more companies like do a seed or a pre-seed round, and then they're done raising money. And if we used to be like super early, and now we may be too late at $1 million. So we are starting to selectively go a little bit earlier. We rarely go to zero. If it's a serial founder, there's a lot of data that indicates that they're a lower risk factor. But we don't have that many serial founders because we're still a growing ecosystem. So we don't really make that a prerequisite for anything. So that's just like one example where we will do very, very early. But other than that, we will go into like 500 a year or something like that. So we're always interested in entrepreneurs. And then what we find is if you're only doing 300K a year, we still want to talk to you and help you grow to the extent we can. We're not an accelerator. Maybe we can send you to our friend Thom for that, or one of the Toms. And then then we want you to think about us and know who we are by the time you do get to kind of that tweener zone.
Thank you. Side note to listeners, one of the Toms, what Scott's referring there to is Tom Snyder, who was formerly leading executive director of Riot, one of the preeminent accelerator organizations in the state, which are now part of NC IDEA. So we made another strategic announcement recently around the time we announced this joint venture that Riot is, in the RAP program in particular, is now part of NC IDEA, and Tom and Rachel Newberry are now part of the NC IDEA team, and we're thrilled and over the moon for that. Back to this, I want to talk 1 minute about the list, because the list, I think, has been cast as like, it became the kind of the source, the impetus for the fund. But I think talking about things that were underappreciated, just having the list, right? And I know this is a little nerdy in the ec dev space, which is a little bit more from a purity standpoint in my world than yours. But data and knowledge and absolutely understanding what an ecosystem really looks like is very important especially if you're trying to orchestrate a statewide portfolio, strategic portfolio of grants and programs. And this list is, Scott kind of glosses over it, but it's not just some casual undertaking. And now that it's being expanded statewide, it is exponentially not a casual undertaking, which is another reason why we're helping with that as well. But I can't overstate the importance for anybody that's in a policy-making space, anybody that's in an economic development space, anybody that just cares to understand the levers of power to pull on. If you don't have good data, you're not making good decisions. Or if they are, it's more by luck than by design. And so I wanted just to pause there for a second, Scott, and give you kudos for even having the concept of the list. I remember going to one of your first, you used to have a big social function around that list, and it was at a museum downtown Raleigh. And I remember going that first night and just, I don't know, the esprit de corps and the kind of fun competition on the funds that were there, who's invested in more tweener companies than the other. Mm-hmm. Of course, we threw ourselves into that mix, like how many of y'all have funded companies that we have funded? And, brings it back to, I think I mentioned earlier, and if I didn't, I'll say it again now, y'all have funded about 36 NC IDEA funded companies. And that's where you start having the magic of an ecosystem that can help people on every stage, right? And why is that important? Robbie, you said it earlier, right? If you're going to start and grow a high impact company, why would you go to any state other than North Carolina if this is the approach to supporting startups in this state?
Yeah, as an entrepreneur, you learn if you don't, and this is a Peter Drucker thing from like an old school management thing, so most people know who that is. But if you don't measure it, then you won't improve it, right? So you gotta like measure.
You don't achieve that which you do not measure. I think is his exact quote.
There you go. I knew you would know that.
So
I think the other key point here is, I think a lot of people assume that, give me a list of all the startups in North Carolina, and that's like in this day and age, you can just go to sources maybe like PitchBook or Crunchbase, and you just get that list, right? Turns out you can't get that list. And in fact, uncovering all of the startups in an area is harder than what I even envisioned it would be. Some startups are just not very public with what they're doing. And so like, how are you even going to know they exist? And so it's kind of funny, in hindsight, I'm sure Scott had planned all this out in 2015, but in order to even do something like an index fund like the Tweener Fund, you almost have to have like a fairly comprehensive list of what are all the companies, right? Or otherwise, How do you know what you're indexing? And so the list was a necessary prerequisite to even be able to do a fund. And you got to do the list in order to understand like what's the scope of the ecosystem.
Yeah. Keeping in mind that you're doing it even more complicated because you're doing a subset, right? Because for the last several years, and this is tracked by Secretary of State Elaine Marshall's office, we've had over 170,000 new startups in the state of North Carolina for the last several years. And it's been varying by a couple thousand here and there. Nationally, there was a surge in startup activity around COVID, and everybody thought, all the pundits and experts thought, it was the COVID bounce. I'm losing my job or I'm stuck at home. I might as well start that side hustle. But most of the country saw the predictable dip in startup activity post-COVID as we all kind of started going back to work and carrying on as we did before. Not in the state of North Carolina. Now, did I say NC IDEA deserves credit for that? No, of course I didn't just say that. But there's something going on, with this statewide ecosystem, this thing of ours that we refer to, that has kept that level above the national average, on a per capita basis. And I think that is just yet another data point for us all to look at and say, yeah, something is happening in North Carolina. And I'm all for piling on when you have a lead position. I am not content taking my foot off the gas and letting people catch up. right? And again, I think we made that bold statement with this commitment to the Tweener Fund. And I think this is just going to be another thing that begets another thing, because one of the things I'm excited sharing with potential LPs and QPs, and heads up, Scott, I'm going to be kicking the ball over to you here in a second and talk about how LPs or interested parties might, become an LP. But you all already have been a couple quarters. You have to tell me if it's been like more than 2 quarters. You are the most active fund in the country. I know you've already got the undisputed title as most active fund in the Southeast, but there were a couple quarters you were the most active fund in the country, if memory serves. And now, if we can double, triple, quadruple, quintuple the fund, I don't think it's a stretch to assert that we should be the most active fund in the country and hang on to that title for some time to come.
Yeah. There's two companies that kind of call balls and strikes on this. One's called PitchBook and one's Crunchbase. Crunchbase is it was TechCrunch, which is kind of the famous Silicon Valley news. They did all the, if you watch Silicon Valley TV show, they kind of mock the show that they had, the demo show, I think they called it, or whatever that was called. But anyway, so TechCrunch, they realized that they needed like a centralized database of all the startups they talked about. They created Crunchbase. It's kind of become its own thing. Those they look at all the data, and we submit all of our deals to them. And we're always we're either number 1 or 2 in the Southeast. There's this Florida Angel group that sometimes beats us out. Like I think 1 or 2 quarters since we started, they've beaten us out. But other than that, we're always the number 1 early stage in the Southeast by far. And then I think it's 3 times, 1 quarter and 4 or 5 different months where we have been the most active, or certainly the top 5 in the country.
Yeah. So explain to listeners, because we were talking before we pressed record, there's been mostly tremendous joy in reaction to the announcement, but not everybody's been happy about that. There's a few, there's a segment in the capital stack that felt maybe we could have deployed capital more favorably to things they were more aligned with, to put it politely. But the argument I've been making has been, what do you think it's going to do to the ecosystem for everybody? And I know it's cliche to say the rising tide, but when the Tweener Fund, the North Carolina Tweener Fund, powered by NC IDEA, is consistently the most active fund in the country, you cannot, we'll see, right? But you cannot at least preemptively convince me that this will not import more capital into the state. Mm-hmm. FOMO, if nothing else, right?
Yeah, you can. Yeah, so PitchBook does this big quarterly release, and whenever it comes out, you can almost time it to the day. We start receiving massive inbounds from funds, and they're kind of like, "I saw you guys in the PitchBook data. Who are you, and what are you doing down there?" We have it on our. This comes up almost every time, and you and I haven't even talked about this. They'll say, we want to do more in that area. We just haven't figured out a way to learn about the companies there. And we think this is great. Can you guys be kind of our eyes and ears? So what that does as a benefit for our founders is we have a database of that. And Robbie, the AI king, is every VC is pretty structured these days in what kind of deal they want to see. So they'll say, number 1 is category. I love these categories, but maybe I don't do health tech, or maybe I don't do consumer. Maybe I am consumer. So they're very clear on the category they want to be in, and then they are very clear about the scale. I like to invest this check size, and then the round type. And in our world, we have pre-seed, seed, ABC, and those ABCs are called the growth phase, and then we have earlier stage. So they're very clear on. It's very clear map, and then we know what founders are looking for. So we've always wanted to connect a database, and that's going to be one of the things that this grant helps us do as kind of an extra bonus. We threw that in as icing on the cake for you guys, Tom. But yeah, we're very big. There's a huge set of funds that want to invest in more North Carolina companies. They just need someone to kind of connect the dots for them.
Sharp it for them.
Yeah, we're very excited to. We've done that for maybe like 30 or 40 of our companies, kind of manually, but we're excited to kind of get it on a more data driven kind of system.
And that, by the way, it aligns with our data too, because we track all the companies we fund, as Robbie can attest. We send out an annual survey and we ask for things about, fundraising and things like that. And over the last probably 5 years, hundreds of millions of dollars been raised by companies we have funded. And the interesting data point is that over 70% of all that capital is coming from outside the state. And I mean, that's in and of itself not that shocking, right? Because most funds have a thesis, and there's no fund that is, there's nothing altruistic about a fund. You got LPs to answer to, you got returns. So you can't say, well, we'll only fund North Carolina companies, which Tweener Fund does. Hence, one of the reasons why we did this deal should be self-evident, but I'll double click on that just to make the point. But this will just increase that. And then having the database should even make it that much easier that we can provide that kind of connective concierge level service for the people we serve, which are the brave founders across this entire state, daring to pursue their entrepreneurial ambition to the betterment of our communities and our economy.
And Thom, what we often hear is that, I would say this is a extremely common reason we get approached by entrepreneurs is they would just love to have someone in North Carolina on the cap table, right? The vast majority of companies, if they're raising especially significant money, have to go outside of the state. That they can't. There's not enough large funding sources in the state to secure big rounds, and so oftentimes that means that all of the money that they're raising comes from outside of North Carolina.
Right.
But we'll hear from these entrepreneurs that they would love to have some North Carolina representation. And so that's how oftentimes some of the first conversations get started with us.
Well, let's go deeper on that. I'm going to come back to how potentially interested LPs should engage. But since we are talking about, the founders, gentlemen, how should entrepreneurs approach the North Carolina Tweener Fund powered by NC IDEA?
Yeah, I mean, it's super easy. Scott and I are both approachable, and we meet with every entrepreneur, and we meet with entrepreneurs we don't fund, and so we try to live up to that standard. I'm Robbie at tweenerfund.com. Scott's Scott with one T at tweenerfund.com. The easiest way is just to send us an email, and we'll take it from there. No process. Just I often say we're the most founder friendly, fund that our entrepreneurs are going to work with. Right? We're operators. So we've lived this multiple times. We've been through the pain of fundraising. We know what that's like. And so we're not trying to create a arduous process. We're trying to make this as streamlined as possible.
And trust me, we'll send you plenty of deal flow because that's the whole purpose of our seed and micro grant program. So we're hoping, many more will be adding North Carolina Tweener Fund on their cap table. Okay, so I can't think of anything easier than email me. So then let's talk about LPs, QPs. Like, how might they stumble into the fund and get in on this wonderful model that is redefining best practices as we speak?
Yeah, so this is where I say our little legal blurb, and by SEC law, you have to be an accredited investor. And some people kind of ask, can we change that? And the answer is no. It's like an SEC thing, right? You don't want to, just like Thom with this little piece of paper, we don't ever want to get in trouble with the fine people at the SEC. That stands for Securities and Exchange Commission, and they have all these rules that regulate how all types of things work, and one of them is the way venture funds work. So this is a particular one where you do have to be accredited. Now, the accredited, a lot of people kind of view it as this like crazy wealthy person. Many people just on your compensation, if you have two working folks or you're a little bit later in your career, most people qualify. You'd be kind of surprised that it's kind of come down from what I find a lot of people's expectations. I can never remember the exact qualifications, so I've tried to not say it. Robbie, if you know them, you can, but it's there's kind of like there's an asset, like a net worth kind of qualifier, and then an income qualifier. And if you just Google it and look at the SEC, don't look at any other source, you will see what it is. So that's requirement number one. If you are accredited, so go check that. We want to hear from you. And again, open door if you want to email us. So we have some LPs that want to just meet and kind of do the relationship kind of building, which we enjoy. We have others ones that are like, I'm super busy, I travel all the time, can I just do it online? And that's kind of like how Robbie and I would do it, right? And so if you're kind of in that bucket, you can actually just go, and this is what's really nice about this format that is powered by AngelList is you can just go sign up online, and they will do the accreditation checks and all the things, and it's all, you can wire up your banks using Plaid and kind of modern technology. You don't have to do this, like, you're not going to sign like a 80-page document and so on and so forth. And the way it works is it's a minimum commitment of 1 year, and that's cut in very clear 4-quarter increments, and it's $30,000 a year, and that ends up being $7,500 a quarter. And that is the lowest way you can, other than doing writing your own check, $25K into one company or something like that. That's the cheapest way you can get the type of diversity that we're talking about in private companies. If you went with another traditional fund, they're typically going to have a minimum commitment of $300K to $500K here locally, which is quite a bit. So that's another benefit. If you want to get into the game, we think this is a great entry point because it's diversified, it's got a low entry point, and so on and so forth. So that's important. And then let's talk about fee structure. So we do have a fee, and we have a management fee. The traditional VCs are at 2%. We're at 1% because this is a passion project for us. And that doesn't go into luxurious vacations for Robbie and I, or certainly wardrobe activities. That goes into just kind of like the way you guys do it. We put all that back into the rubber hitting the road. And that basically is our little events we do, and one part-time support person, that kind of helps us with a lot of that kind of stuff. And that's it. The rest of what we do is pretty much Robbie and I doing this because we just love it. And now AngelList does have a fee structure, so you should look at that. Again, it's kind of like best described on angellist.com. I don't want to take all our time on that, but there is a fee there. And then we have what's called carry. And this is where, so you always have, so the standard VC thing is 2 and 20, we're 1 and 20. So that means 1% management fee, 20% carry. What that means is after you get your money back, which in this example would be $30K, then whatever you make above that, we do a share of that. You get 80%, and then we get 20%. That incents us to be rewarded for when we make a really good outcome for your initial investment. The other thing to know about investing in this kind of thing is it is not a liquid asset. So this is not the stock market where you can kind of like just buy and sell and put money in and out of it. It is a liquid. And that is a benefit for a lot of people because what happens is your money compounds usually to the order of 10 to 12 years over that period of time, growing inside of a company with no taxable transaction. And then you have a very, hopefully a big taxable transaction. And Thom, you know a lot more about this than I do, but most of our investments have what's called QSBS. And that is a tax treatment that allows, if they do things a certain way, and most of these companies do, then you get the first, a very big chunk of the first amount of money you make tax-free at a national and a state level, depending on, this won't last forever. These things kind of go in and out, but right now it's a thing. So there's a lot of tax benefits, there's a lot of compounding benefits, and there's a lot of, in the investing world, they call it alpha. So we're going to expose you to a set of a relatively high risk, thing, but in a diversified way. So we take a high risk instrument and we try to lower the risk as much as possible within that high risk instrument through diversification. But it is something that will behave very differently than like, a bond or a stock or any of that. That's why most hedge funds, or even like our state treasury, has a pretty big allocation to what they call private equity, which is the same bucket that we would be considered in. So then to sign up, you just go to nctweenerfund.com, and then there's a little invest button. We have a video pitch. If it's 2 a.m. and you're like, this is really neat, I want to learn more about it at 2 a.m., you can watch a pitch where Robbie and I go through everything in detail. We point you to all those things I just talked about, the SEC accreditation, the fee structure. Then you can go, when you click the invest button, there's a whole nother explanation of AngelList that tells you even more about it. You can see the documents that you're about to sign in the process. And then if you hit another button, you're into the process. You go through accreditation, and then you're done.
Easy as that, Thom.
Easy as that. I just
Two
got
buttons.
I got the signal from Christian that we got to land the plane. So I want to wrap up making the point. Scott, you said 30,000 annual minimum commitment. Clearly, you can do a lot more. I mean, that's There's no cap on the upside. I mean, frankly, that was the big part of the announcement, that we committed $4 million to this effort. And I want to say, I think I mentioned at the beginning of the pod, I'm going to kind of end it. This is now a vehicle for any organization, any high net worth individuals, qualified people, to your point, Scott, about SEC regs. But like, if you want to have kind of investment opportunity upside, but also, dare I say, a little bit of altruism on the side, think about joining the fund. It will only fund North Carolina based companies in a wide variety of verticals. So it's, no eggs are all in one basket. And ultimately, it's just going to strengthen this thing of ours to the benefit of everybody involved in it. So please, if you've been waiting for the right thing to get engaged, to get off the bench and get in the game, I think this is your time. So please, anybody watching or know people that could do so, consider it, because it will pay benefits and dividends to us all. So with that, I want to thank my two guests. Either of you want to make a parting thought here as we sign off?
One thing that Scott didn't mention that we get a lot of good feedback on is at the end of every quarter, we do a 1 to 2 hour webinar where we go through everything we saw that quarter and all the companies we funded. We go one by one and talk about each of them. And we hear that people, especially that are wanting to kind of get tapped into the ecosystem, that's a great way to get exposure quarter after quarter about all the companies that are fundraising and kind of the trends that we're seeing across the state.
That's a great point.
Yeah, on the LP side, one thing I would wrap with is the number one question we get is, could I do this out of my retirement vehicle, like a 401k or an IRA? And the government's gotten very flexible on what you can do there. And there is a company called Alto, ALTO, that I would say about a third of our LPs use that company, and they act as a custodian to do a directed investment into out of your 401k into the North Carolina Tweener Fund. So that can be a really cool way to add diversity to a mechanism that is frequently on that kind of like 10-year plus horizon as people, are thinking about maybe, retiring at some point in the future. And it kind of, the time frame may align with that more than, something out of a savings account or something like that. So that's a very frequently asked question that we have a lot of LPs that love that feature.
That's great. This was months in the making, not to get into the weeds for the listener, but this was not a trivial undertaking. We did our share over the last several months to keep the legal industry in North Carolina thriving. And through all that, I did not know about the possibility through Alto that you might be able to do this through your 401k. So both of you, yet again, drop a little knowledge bomb on me, and I think that's a perfect way to end this episode. I'd be remiss if I didn't use a parting commercial for all the media that's going to be produced, is being produced by the Tweener Fund, including podcasts that both of these capable gentlemen are on and branded as well. So feel free to tune in everywhere you get your podcasts. And with that, I want to say thank you. And in all sincerity, I'm looking forward to spending a lot of time with the two of you all over the state. I can't emphasize enough, the Triangle is undeniably, it is the great center of economic output, GDP for the state of North Carolina. But there are great companies gestating all over the state, and we hope to find a lot of them and get them into the portfolio. So with that, thank you. And I say goodbye for now, but feel free to tune in for the next episode. And as always, if you, the listener, have ideas, please let us know. I don't have the Thom at, I have the T Ruhe, TRUHE at ncidea.org. Feel free to send us guest ideas or topic ideas, and we'll do our very best to get them on air. Thanks, guys. See you soon.
Flywheel.
Thanks, Thom. Triangle Tweener Talks is hosted by Scott Wingo, presented and produced by Triangle Tweener Fund, with creative assets and design support from our friends at Walk West. That's it for today's episode. A big thank you to our guests, sponsors, and the team that makes this podcast possible. If you enjoyed this episode, don't forget to subscribe, leave a review, and share it with someone who loves the startup stories coming out of the Triangle. Thanks for listening. We will see you next time on Triangle Tweener Talks.